it's Linton here from Greenbox Markets. So on my morning run this morning, I was giving a lot of thought to the current Bitcoin situation. We've seen a lot of volatility in the price lately, and also a lot of people who are getting involved in Bitcoin. So for me, the issue is when I want to invest in something, I need to know what it is all about. I need to know what is behind that investment, what drives the value of that investment, and how it's going to benefit me. So I think it makes sense to try and explain to you what Bitcoin is all about, because I think that there's a lot of people investing in Bitcoin that don't actually really know what Bitcoin is all about and how it works. So the first thing you need to understand about Bitcoin is that it's a digital currency, it's a cryptocurrency. So there's no actual printing of money that takes place like in normal government money systems. This is all digitally based. It was launched back in 2009 by a programmer called Satoshi Nakamoto, who came up with the Bitcoin concept. And it is a great concept. It's done phenomenally well. I mean, from when it started in value to where it is today is a massive increase in value. But the issue for me behind it is the volatility and the risk involved. And there's simple reasons for that, which we'll get to now. What I'm going to try and do first of all is explain to you what Bitcoin is and what Bitcoin mining is. So for general people like you and me, if we wanted to trade in Bitcoins, we would open up the Bitcoin chart like I have over here, and you would be able to buy and sell Bitcoin on a chart like this. But there's also, or the main driving force behind it is Bitcoin mining. Now, I'm sure a lot of people have explored what Bitcoin mining is and not really understood what it's all about. So that is the purpose for this video. I want you to try and really get a grip of how Bitcoin mining actually works. So what basically takes place is that there are computers in a competition throughout the globe. Everyone who takes part in Bitcoin mining is in competition to solve what is called a block. So what is this block? Is it just a mathematical calculation that needs to be completed? This is the general view. This is what most people seem to think, is that it's just a mathematical calculation that needs to be solved, and you're then rewarded with Bitcoin. That's kind of right, but there's a lot more depth to it. It's not just someone who came up with a clever mathematical question and is asking people to answer the question in order to be rewarded with Bitcoin. I mean, that doesn't really make sense. So what Bitcoin mining is actually the gathering of data. So Bitcoins are being transferred between people and even businesses, as it's accepted by a lot of businesses globally. But they're being transferred between people all the time. And there needs to be something in place in order to keep record of all of these transactions. And that is what Bitcoin miners do. It is their job to keep record of all of the transactions. So what happens is each new set of transactions is grouped together in what's called a block. And it is the miner's job to confirm those transactions and confirm that the block is accurate. So once he has confirmed all of that through the use of his computer, the block then generates what is called a hash. And that is a specific code which is relevant to that block itself. So that hash code, that number, is the answer to the mathematical calculation of those transactions, if that makes any sense. That is then added to what is called a blockchain. So in other words, the previous blocks that have all been solved by each Bitcoin miner are all added into one continuous long chain, which is actually in essence a general ledger of transactions. The big question that a lot of people are going to ask is obviously, so if that's the case, can't it be manipulated? I mean, everything online is able to be hacked. You can hack computer systems and change numbers and change things, and all of a sudden, someone could be out there being awarded thousands and thousands of Bitcoins when they haven't actually done the work. And that is where Satoshi Nakamoto was actually very clever with the concept and how they put it together. So that hash, that code that comes from completing the block, that is a very specific piece of information. And it's actually relatively easy to get to the hash once you have the entire block of data that you need, the transactions that have taken place. But to take the hash and work it back to the block is practically impossible. So for someone to hack into the system or do something and change a number in the hash would then throw that block out as inaccurate. Now what that also means is that obviously it would be noticed straight away, because everybody that takes part in Bitcoin mining has the general ledger on their computer. So they will be alerted immediately that there's been a change to a previous hash. Not only will that take place, but each time a new block of transactions is out there and Bitcoin miners are trying to solve that block or confirm all the transactions in order to get the new hash, the hash from the previous block is part of the calculation for the new block. Okay, let me just say that again. So the hash from the previous block, the answer from the last block of information on the general ledger, that calculation answer is actually used in the calculations for the new block in terms of generating the hash for the new block. So should anything be changed from way back down the ledger, if anybody does manage to hack into the Bitcoin system or tries to change a hash of a previous block, every single block from that point on, in other words, every single calculation from that point on would be thrown out because their hashes would change. So it's actually quite a safe system when you look at it from that perspective. What is not safe about Bitcoin, and this is personally why I don't trade Bitcoin, is the following. The volatility is intense. It is a new thing that has hit the world, kind of like when the internet started. You know, the internet was looked at by many and everybody was scared of it, and they thought, well, you know, we're going to steer clear of this. But it has become the biggest business worldwide. I mean, you look at e-commerce websites. There's companies that just exist online. They don't even need office space, you know, because the internet makes it so easy to market and sell things. So the internet was a huge revolution, and it was a big answer to a lot of businesses. Although there was a lot of fear in the market when the internet started. And I think the same thing applies to Bitcoin. So there's a lot of fear surrounding cryptocurrencies, but there's also a lot of truth behind the fear. And here's the reason for that. So Bitcoin is a peer-to-peer system. There is no use of an intermediary like a central bank, etc. Which means that Bitcoin is actually not regulated in any sense. And that's on an international basis. So just think about the loopholes and the doors that opens up for guys who have not above board businesses. You know, it's easy to transfer money internationally, globally, through Bitcoin without it being regulated in any sense. And what that also means then is that it's extremely difficult for governments to track those transactions. And if it's difficult for governments to track the transactions, it's difficult for them to tax those transactions. So you can kind of see where I'm going with this. If it's difficult for them to tax the transaction, obviously they're not too keen on that kind of thing taking place, especially on an international level. So they're going to step in somewhere. Now, over the last week, we've seen a massive, massive decrease in the value of Bitcoin. I think it totaled at around about a 35 or 30 to 35% drop in something like 7 or 8 days. There was a big spike back up in the price yesterday, and it has settled a little higher around $3,700. So the peak was just below $5,000, and it traded all the way back down to about $2,900 in a couple of days, and then back up to $3,700. So percentage-wise, that volatility is intense. And from an investment perspective, if you had decided to get involved in Bitcoin and invest in Bitcoin at $5,000, and 7 days later it was down to $2,900, that is a massive whack to take. And the reason behind that drop is exactly what I spoke about. China has stepped in and said, you know what, we don't like the way Bitcoin is controlled or not controlled. So what we're looking at doing is we're actually just going to ban cryptocurrencies in China. And obviously, if a cryptocurrency is banned, that means that those transactions are no longer valuable, which means that the price of that cryptocurrency is just going to fall through the floor. If China actually goes through with the ban, you know, it could affect Bitcoin, and what will happen is you're possibly going to see a lot of countries follow suit, basically because governments are losing out big time due to Bitcoin and due to the fact that they are not able to tax these transactions. I also understand the argument that a lot of people are going to make, and they're going to say, yeah, but you know, Bitcoin has still, even if it started back in, you know, 2011 at a couple of cents per Bitcoin, and it's only $3,000 today, that's still a massive, massive increase. And yes, I agree with that. That is a huge, huge return on investment if you started back then. Chances are still likely that it may grow and still keep soaring. You know, there's a lot of guys predicting huge values for Bitcoin, and that is quite possible. But the risk involved is that at any time, major countries could ban cryptocurrencies because they are not able to tax them. And that will make the price plummet. That will make it fall through the floor. So if you have all your eggs in that Bitcoin basket or in a cryptocurrency basket and that happens, you run the risk of losing everything literally overnight. And that is the reason why I'm not trading Bitcoin currently. You know, if things stabilize a little bit, perhaps some form of regulatory entity steps in and Bitcoin is a more regulated thing, I may look at it, because I also do believe in the concept. I think it is quite a nice idea that, you know, the central bank isn't 100% in control of something. It gives the user at the end of the day a little bit more control over their own funds. And the costs, you know, transaction fees are really, really high. Quite often on international transactions, the fees are ridiculous. And that is the main reason why these cryptocurrencies are so popular, is to save on the transaction fee side. But I do feel that some kind of regulation needs to be put in place in order to protect the cryptocurrencies and in order to protect your investment. So to end off this video, that's basically what I want to say, is that I find that because it's not regulated and the governments obviously can't tax it and are losing out, that they are going to have a finger in that pie in terms of trying to slow down cryptocurrencies or stop them altogether until there is maybe some kind of regulatory entity in place. And I feel that until that takes place, I probably won't be trading in Bitcoin or mining in Bitcoin for that matter. I hope that clears things up a little bit for you guys so that you understand how the mining process actually works and what's involved, and then also why there is such a huge risk involved with Bitcoin. Enjoy the rest of your weekend and take care. Cheers.